Most first-time buyers start in exactly the wrong place. They open Zillow. They fall in love with a house. They call an agent. And then somewhere around week 3 of the process, they find out their credit score isn't where it needs to be, or they haven't been pre-approved, or the house they loved went under contract 2 days ago while they were still figuring out what a contingency is. The home buying process has a sequence, and do it in the right order, and each step sets up the next one cleanly. Do it out of order, and you're constantly catching up to a process that already moved on without you. Here is the exact sequence, step by step, so you know what's coming before you need it. The first 3 steps happen before you contact a lender, an agent, or anyone else in the industry. They're the foundation everything else sits on. Step 1 is pulling your credit reports. Not your credit score, your full reports from all 3 bureaus, Equifax, Experian, and TransUnion. You can do this free at annualcreditreport.com. You're looking for errors, outdated information, and anything derogatory that might be affecting your score without your knowledge. Disputes take 30 days to resolve, so you want to find problems now, not after you've applied for a mortgage. Step 2 is building your budget. This means calculating your actual take-home pay, not your gross income. Then applying a realistic housing cost ceiling of around 30% of your net monthly income. Then adding the costs most buyers forget: property taxes, homeowners insurance, PMI if your down payment is below 20%, and a maintenance reserve. The number you land on is your real budget, not the number a lender will approve you for, which is often significantly higher. Step 3 is saving for more than just the down payment. Most buyers budget for the down payment and forget closing costs, which typically run 2 to 5% of the loan amount on top of the down payment. And after both of those, you need an emergency fund that survives the purchase intact. 3 to 6 months of expenses kept liquid after closing is the minimum buffer that separates a comfortable new homeowner from one who is one broken appliance away from financial stress. None of these steps involve talking to anyone in the industry. Do them first. Once your credit is clean, your budget is set, and your savings are in place, you're ready to talk to a lender. Pre-approval is the process of a lender verifying your income, assets, employment history, and credit to determine how much they'll lend you. And it requires real documentation, tax returns, pay stubs, bank statements, and a credit pull. A pre-qualification, which is what some lenders offer as a first step, requires none of that verification. They're not the same thing, and sellers know the difference. Get pre-approved by at least 2 lenders, ideally 3. Not because you'll use all of them, but because the comparison gives you real data on rates, fees, and loan products. The difference between lenders on a 30-year mortgage can mean tens of thousands of dollars over the life of the loan. Shopping takes 2 extra hours. The savings justify it every time. Ask each lender specifically about first-time buyer programs, state down payment assistance, FHA, USDA, and VA eligibility if applicable, and whether they have experience with the loan product you're most likely to use. A lender who doesn't know your state's housing finance agency programs is not the right lender for a first-time buyer. Your pre-approval letter has an expiration date, typically 60 to 90 days. Don't get pre-approved until you're genuinely ready to start making offers. If your search takes longer than the expiration window, you'll need to refresh it. With a pre-approval letter in hand, you're ready to find a buyer's agent. A buyer's agent represents your interests in the transaction. In most cases, their commission is paid by the seller, meaning their service costs you nothing directly. However, commission structures change significantly in 2024, so ask your agent specifically how they're compensated and what agreement they'll ask you to sign before you start working together. The agent you choose matters more than most buyers realize. You want someone who works primarily with buyers, knows the specific markets you're targeting, has experience with first-time buyers and the assistance programs available to them, and communicates in a way that matches how you process information. Once you're working with an agent, the search phase begins. Here's what most buyers don't know going in. In a competitive market, the search phase is as much about education as it is about finding a specific house. Set up automated search alerts on Redfin or Zillow for your target area, price range, and property type. New listings in competitive markets get offers within days. You need to know the moment something becomes available, not when you happen to check the app. When you find the right property, your agent will help you structure an offer. The offer includes the purchase price, your earnest money deposit, your proposed closing date, and your contingencies. Contingencies are conditions that must be met for the sale to proceed. The three standard ones are the inspection contingency, which gives you the right to have the property inspected and negotiate repairs or exit the deal if significant defects are found. The financing contingency, which protects you if your loan falls through, and the appraisal contingency, which protects you if the property appraises below the purchase price. In competitive markets, some buyers waive one or more contingencies to strengthen their offer. This is not inherently reckless, but it requires understanding exactly what you're giving up. Never waive a contingency without fully understanding the risk you're absorbing. If your offer is accepted, you're under contract. The clock starts immediately. You'll typically have a defined inspection period, usually 7 to 14 days, during which you hire a licensed inspector to evaluate the property. The inspection report will almost always surface something. The question is whether the issues found are minor, negotiable, or significant enough to reconsider the purchase. After inspection, you and the seller negotiate any repair requests or credits, and if you reach agreement, you move into the final phase. Once inspection is resolved, three things happen simultaneously. Your lender orders an appraisal of the property. The title company begins a title search to confirm clean ownership, and your lender processes your final loan approval, which requires updated documentation and a second credit pull. Do not open any new credit accounts, make large purchases on existing cards, change jobs, or move significant amounts of money between bank accounts during this period. Any of these can disrupt your loan approval at the worst possible moment. Approximately 3 days before closing, you'll receive the closing disclosure, which is the final document detailing every cost associated with the transaction. Review every line. Compare it against the loan estimate you received at pre-approval. Any significant differences should be questioned before you sit down at the closing table. On closing day, you'll sign a significant amount of paperwork, transfer your down payment and closing costs via wire or certified funds, and receive the keys. The property is legally yours the moment the deed is recorded, which typically happens the same day. The whole process from pre-approval to closing typically takes 30 to 60 days once you're under contract. From the moment you start pulling credit reports to closing day, most first-time buyers should budget 3 to 6 months. The home buying process isn't complicated when you know the sequence. It's just a series of steps, each one setting up the next, each one more straightforward than it looked from the outside. The buyers who struggle are almost always the ones who started in the wrong place, fell in love with a house before their finances were ready, or tried to compress a process that has its own timeline. Start with your credit. Build your real budget. Save for more than the down payment. Get pre-approved before you fall in love with anything. Find an agent who knows your market, and read every document before you sign it. And that's the whole process. Now you know the sequence. If this saved you from starting in the wrong place, subscribe for the rest of the process. 3 videos a week, nothing left out.